Wonderful. Next up, a special friend of mine from the European Investment Fund, Patric Gresko. He has been in Berlin and he's back in London because he likes us so much.
Absolutely. Thank you very much, Jan. Thanks again for inviting me to present the European Investment Fund today. Actually, I will continue on Henry's speech and will display and show on the display in my back actually a list of companies. They're obviously all Cleantech companies, and they're part of these very innovative companies that Henrik was alluding to. Any idea what is the common point amongst all these companies? Despite that they are on the European map, they're all European, they're all Cleantech, but they were also all of them in the global Cleantech 100. So all these companies based in Europe were part of the Global Cleantech 100 this year and last year. What is the Global Cleantech 100? It is a list of the 100 most innovative companies in the world, which is established on a year-by-year basis. The second common point to all these companies in Europe is that they have been financed by European Cleantech funds. Not only Cleantech funds, but also more generalist funds, but all of them have been financed by European venture capital. And the very last common point to all these companies is the European Investment Fund. Actually, DIF was the backer of all these venture capital funds that you have seen on the display. So with regards to my presentation today, I'll go briefly through a presentation of what the European Investment Fund is, and I will also mention what is the support that EIF is bringing to the venture capital market, and in particular to the Cleantech industry. Finally, I'll share with you a couple of thoughts about how we view from a fund-of-fund investor perspective the evolution of the venture capital market, and then I'll take a couple of minutes to make an update on our corporate innovation platform. So the European Investment Fund is a very strange animal, a public-private partnership. We are backed by European Investment Bank and the European Commission, but also by private shareholders like Barclays Bank or Raiffeisen Bank. We have 12 billion of assets under management, of which 7 billion is dedicated towards private equity support of funds investing in European SMEs. And finally, and that's why we're a particular animal, we're policy and financially driven. Policy driven because our investment guidelines are set by the European Union. Our objective is to support a knowledge-based and technology-based economy by supporting the venture capital market notably. But on the other side, given that we have private investors, we have to return a minimum of returns on equity. And that's not only for the private investors, but also the majority shareholder, the EIB, has set some minimum returns on equity. With regards to the support to venture capital, we started our activity in 96, 97, and since then we have built something huge. We have more than 260 funds under management, and these venture capital funds have invested in more than close to 4,000 companies across Europe. We have existing relationship with more than 170 funds across Europe. And when I mention Europe, this is not the EU27, but includes also countries like Norway or Turkey, which are partner countries or accession countries. We see nearly everything which is happening on the market, so there is no closing of funds or venture capital funds which happen without us knowing about it and without us having a close look at the investment proposal. And we are invested in nearly everything which is active on the market, which doesn't mean that we invest in everything that is landing on our desk. We have actually a rejection rate of approximately 80%, but the 20% of funds which go through the filter of EIF, they become the active players of the market. From the 7 billion of money allocated for private equity, actually 3.8 billion is allocated to funds investing in early stage technology companies. We have developed a specialty which distinguishes us from other traditional fund-of-fund investor is that we really like to look at a first-time team, first-time funds. So teams coming together which do not have a common track record, which have never worked together and are trying to raise money to support innovative companies. we have developed a specialty in those for those companies. We have specific tools. I mentioned last time in Berlin we have a specific torture room, and once the fund managers go through that torture room, Henrik knows about it, they are fit and then strong enough to raise capital by other investors. We're also first movers in new strategies and new fields, not only geographical fields. We were one of the first mover in venture capital in Eastern Europe, together with the EBRD, for instance, or in Turkey, again together with EBRD or the World Bank. But we also like to invest in new technologies or new trends, and that's Cleantech was one of those such new trends back in 2006, 2007. We were one of the first supporters of pure play clean tech funds, so venture capital funds which would not invest in life sciences or in information communication technology, as we used to call them in the past, but funds which would invest in the clean tech area or in the clean tech investment theme. So we started in 2006 together with Henrik. That was the first fund that we had backed with a pure play clean tech fund. Since then, we have increased our commitments to reach, as of today, 280 million invested in clean tech funds, so funds which will invest in energy efficiency, smart materials, and all other investment themes under the clean tech brand. And we have built now a portfolio of 9 fund managers and 12 funds. So there are a couple of fund managers which have more than one fund under management backed by us. We have a very strong pipeline for 2013. I know that we're mid of October, but I'm still talking about a very strong pipeline. That means that we have another group of 4 or 5 funds which went through the board of directors of EF, which got a commitment from us, but we are waiting for them to get other commitments for other investors to start their investment period. So from this 280 million, which was actually some of the boxes are missing. From this 280 million, it was 210 million 3 months ago in Berlin, and that's going to increase to 350, 400 million by year end. And we have also developed a pretty strong underlying portfolio of companies. That means that now from this 3,500, close to 4,000 companies, we have more than 300 companies which are active in cleantech. Not all of them have been financed by the pure play cleantech funds, but they have also been financed by more other traditional VC funds. A couple of words about the cleantech experience so far, and I will not extend very long on that. I think given the magnitude and the increased support of EF to the cleantech asset class, I would say, I cannot say that our experience has been negative. On the contrary. However, if we look at those companies which have been for a bit longer in our portfolio, we realize that it has taken a bit more time or a bit more money than the initial expectations. And that's the feedback that we get from our fund managers. But even though on that topic, I would be careful, because the average holding period of our portfolio companies financed by our pure play clean tech funds is around 2 years, 2 years and a half, more or less. So it's a bit premature to draw conclusions. However, what is really, really positive is that we are seeing that the first breed of VC funds with active in pure play clean tech fund have realized the necessity to review very quickly the way they were operating in order to become much more efficient. And one of the ways, there are 2 or 3 ways that have been put forward on the market. One of the ways is that we're seeing the emergence or the single emergence, I would say, of funds which are having a very narrow focus on specific industries, who will not invest in areas where they do not have the skill set, and that's, for instance, the Finnish fund called VNT. VNT in Finland will only invest in electrical systems because this is where the strength of the team is. However, other funds will continue investing and adopting a generalist industry focus, so investing in a variety of industries, but they will not do that alone anymore. They will do that in a more efficient way by adopting collaborative models, by collaborating with all stakeholders on the market. And one of the major stakeholders on the market is the corporates. Larger corporations are entering into the open innovation strategy, are willing to know what is happening at the startup community level, because they realize that the R&D there is much stronger and much more efficient than what they do in-house. And hence, they're willing to access that. And one of the ways to access that startup community is to partner with venture capital funds, which will collaborate and open for them the startup market. And DIF has actually seen that as an opportunity as well, given our privileged position on the market. As I mentioned earlier, we have a very large portfolio of VC funds. We have an even larger portfolio of underlying portfolio companies, and we're willing to put that at work to the benefit of the VC funds, the corporations, the SMEs, and other platform partners. So we have developed a concept that we call the Corporate Innovation Platform, which will take the shape of a fund to be financed by large corporations. And our objective is to help those corporations which haven't made that step yet, who are struggling to access the European ecosystem, notably in Cleantech. We're willing to help them by advising them on the selection of the most appropriate venture capital funds which will collaborate with them. We're willing to give them an access to our existing portfolio of companies. We are sitting there on a gem, on a treasure of 3,500 companies based in Europe. We're willing to put in place a collaborative model which will ensure that when they will discuss with the VC fund managers, they will not discuss about topics which are irrelevant to them. They will not discuss about valuation of companies or calculation of performance of net IR or things like that, which are totally irrelevant for the corporates. We're willing to put, and we have designed a platform which will ensure that the communication between the venture capital funds and the corporation will be only on strategic matters relevant for the corporations and relevant for the VC funds. This model has been designed for the corporations, but also for the VC funds. It is a win-win-win situation, a win-win-win tool, in the sense that VC funds will find it much more easier to access corporations who will provide them with a further added value in the skill set that they need to analyze the underlying portfolio companies. They will find a privileged access to corporations who will provide a early commercial partnership for their portfolio companies. So that's the aim of this corporate innovation platform. Finally, so last word, that's a word for the corporation. If you're willing to access and have a privileged access not to these existing companies, but to the next generation of innovative clean tech companies, please do not hesitate to knock our door, and we will find a solution to help you having an efficient access to this market. Thank you very much for your attention.
How many clean tech funds did you support this year?
This year, very good question. 1, 2, 3 funds.
3 funds.
Yeah. And there are some 3 or 4 more to come by year end.
I'm curious to learn who they are. And if any new VC is in the room who wants to raise a fund, I think this first time fund manager support is really interesting, because these guys know the market so well and they are sharing the know-how, right, Hendrik? Absolutely. Okay, wonderful. Patric, here's your speaker gift. Thank you very much.
Thank you.